Good morning, it's Charlie giving you Monday's market commentary, and I hope you're very well. I just wanted to start off this market commentary posing the question to you: do you manage your risk well enough? And what I mean by that, it's not about, I'm not necessarily talking about the standard of having X% at risk per trade, although obviously that is something that people need to obviously consider when they're taking a trade. They don't want to be risking 10-20% of their capital per trade. They only want to be risking a very small amount of less than 2%. A lot of people will be 1%, some people will be 0.5% at risk per trade. But it's more about managing your risk in that relative to your losing trades, do you manage your risk well enough so that when you have your winning trades, they more than pay for the losing trades. And a good example of this is the fact that on Friday's update I was trying some trades, and because I was going sort of counter to the trend at that point, I think it was on the euro, it come down a bit, but we had positive momentum still at that stage, and so I gave it a go, but I managed my risk on those trades. And I tried an Aussie dollar trade, as you remember, as well. And so what I did is I risked across all of those trades 250,000. So as for, in FX terms, so that's 2.5 lots. Okay, so that's 2.5 lots across all those trades. Fair enough. And so I managed the risk and to ensure that I wasn't overexposed on the day, so to speak. So lost about £390, I think it was. But then if we look at what I've traded here today so far, as we can see, forget cable because that was a break-even trade. But the Aussie dollar, I've only been long 100,000. Okay, the trade's not complete yet because I'm still in this trade. I've taken 1/3 off. But if this trade runs for me, then it will more than make up all of the loss from Friday. And it's actually only 100,000 or one lot at risk, a one lot trade, as opposed to 2.5 lots across those other trades. So that's what I mean, that if you, and I think I demonstrated it the previous Friday as well, where I had the first trade was a stop out, the second trade was a smaller position, but it made back all the loss from the first trade and delivered a profit on top. So it's that sort of trading whereby you don't have to worry about having losing trades because your winners more than pay for them. And so it's just something to consider when you're managing your risk. And also you want to manage your risk as relative to the type of trade you're taking as well. Just like the trades that I was taking last week, I'd actually, on the individual trade, they added up to 2.5 lots, but I actually downsized each position because of the circumstances that there were there. So I'd manage that risk relative to each of those trades. And then when you're trading, when you see something which you have very high confidence in, then you trade at normal risk. So just a good example there of running your trades first and foremost, and then managing your risk per trade as well. You may want to tailor it. Now, one thing you have to be a little bit careful of, though, and is you don't want to be on one trade, let's say, risking 1% of your capital, and then on the next trade only risking 0.1%, because there's too big a differentiation between the two. So you have to be a little bit careful of that. You don't have too big a differentiation between your trades, because then what will happen is you'll have winning trades down here where you've only risked 0.1, and if this one becomes a loser, then again your risk to reward is too far out of kilt. So just bear that one in mind as well. Right, let's go on into the markets then and have a look at these. Let's put these onto the daily charts. Starting off with the Aussie dollar, I've been talking to the guys in our trading room for the last week or more, or certainly the last week, talking about the Aussie dollar and the potential for longs, and I've had a couple of nice long trades off it actually over the last week, and as you can see, I'm long again on the Aussie dollar. So yeah, I still see some potential upside on the Aussie. I don't know how much, but I do see some potential on the upside. We've got a trend line, a trend channel even. Let me see if I can draw it up here for you. So let's. No, I don't do that. Where do I get my... See, I'm so poor at remembering where all my tools are. There they are on here. Okay, so if I draw this on, and it's never that accurate on telecharts, but you'll get the idea. So we can see that we've got a trend channel here on the Aussie dollar. So the potential is to come up to this upper trend channel line, So over the coming days, and so that's the potential for the Aussie dollar. There is resistance ahead of that before it can get to there, so that's something to bear in mind. But certainly it does have some potential to get up to this trend line, and then potential thereafter to maybe even have a breakout. But we'll see about that. Fundamentally, the fundamentals behind the Aussie at the moment aren't brilliant, but certainly the trade setup is there. So that's the Aussie. Now the likes of the euro become a bit more difficult in that obviously the euro's had a decent sell-off here last week. There's a lot of negative sentiment towards the euro right now, and I'm not talking about just retail sentiment. I'm talking about, let me actually have a look whilst I'm just off screen what the retail sentiment is for this. I believe, but it's not just. We've got it's about 67% of retail traders are short euro dollar at the moment, so nothing too major. But it's the analyst community who are short on the euro dollar as well. So it's quite interesting the bearish sentiment towards the euro right now. So, but nevertheless, the euro is weak, and it does have fundamentally negative sentiment towards it. So we should really be looking towards more downside. There may be some short upside plays on the euro dollar at certain times, certainly if it comes back within these bands here, but at the moment the switch has gone to the negative side, and to an extent it's the same on the pound at the moment as well. Now, it was only a week ago I was looking at the pound saying, well, if we can break up, if we can get above this 166 level, then it could be wanting to break out, and it's how quickly it has rolled over. So it does change the synopsis towards the pound, and we could be looking towards a move at least to this 100-day moving average, and potentially a little bit more. So we'll keep an eye on that one. It does look like at the moment the pound's got a bit more downside in it, so we should be looking at bearish opportunities most likely for the pound and for the euro dollar. And this is the weird one though, the euro yen as well. Sorry, not the euro yen, the dollar yen I wanted, because come on then, dollar yen, up you come. I'll press pause whilst it's waiting to load it. Okay, it still doesn't want to load, so I can't really do much on the dollar yen. But overall on the dollar yen, let's see if I can take it to a monthly chart and see if it comes up then. Okay, monthly, the data's wrong. Okay, that's why it's not showing it on the daily charts. Never mind. But on the dollar yen, essentially the intraday charts are working fine. I've been talking about this for a long time, still looking for more overall downside on the dollar yen. It's a very similar picture actually to the euro yen. So if I take us to the euro yen and take us to a monthly chart, it's very similar, looking for us to come down to the lower bands on the monthlies, and the dollar yen looks similar to the euro yen. So this one is one to sell. I think that's about it. Let's have a quick look at the S&P. Take us back to a daily chart now. Again, a lot of negative bearish sentiment towards the S&Ps at the moment. It's broken this channel that it's been in for a long time. It's always possible it wants to come up to do a kiss goodbye move. So if it does come up, look for that. But overall, then we want to be keeping our eye on the bearish side of this. Unless it breaks out of these highs, then for now the short-term sentiment towards this is negative. Right, I shall leave that with you. I'll be back in touch on Friday for live trading. Oh, hold on a second. Let's just bring this back to, here's a good example. So there you go. So that Aussie dollar is still running. It's now basically, if I wanted to close it all out now, I've made back the loss from Friday, and which was much bigger overall on those trades, and with one smaller trade you've already made back the losses. Good example there. Right, I shall leave you to you and see you next Friday on Friday.